So welcome back to another episode of Backholder Pod. Essentially, I think the Hang Seng Index has recently reached its all-time lows again. So it's currently trading around the 15,000 points, back to where it was trading in 1998. So that was the year that I was born. So just think about it. You bought the Hang Seng in 1998. 26 years later, when your kid went to finish university already, and you come back and then you see your Hang Seng still at the same level. So that's basically what happened to the Hong Kong index. I think similarly for because the Hang Seng explains the Hong Kong market, similarly for the Chinese market, the A-shares market, the CSI 300 is also their benchmark index. I think from peak, they are also down around 30 to 40%. So I think we're just going to open the discussion because recently there's this new regained hype and regained excitement in the Chinese market, where you see some of the tech names rebounding quite aggressively. I'll just open the discussion to the floor. I believe Bunti also do have a bit of Chinese exposure within the four of us. So currently, I think disclaimer, me and Bunti have a bit, I have a lot. Kelvin and Eric have zero. So yeah, Bunti, maybe do you have any opinions on this recent rally?
So I think last night Alibaba went up by 8%, right? So that was after the announcement. It's not an announcement actually. It's a rumor or a reporting say that Jack Ma and who's that? Joseph Tsai, right? Okay, so two of
Chairman.
them, yeah, the chairman. So two of them insiders, they are buying quite a number of shares. So now it's bullish lah. So went up by 8%. So questions to Chicken is that is it too late to buy now?
Don't forget, the backdrop of the 8% rally, right, is still down 76% from its all-time highs. So if you ask me what whether can buy or cannot buy, I only can tell you, you are definitely going in at a much cheaper base because I've been averaging down from a very high base. So my cost is at 110. So you're still entering at a 30% discount compared to me. And I didn't sell lah. So I guess it speaks about what I think about the company and where I stand with the valuations lah. I don't want to space specifically lah, but you think about it yourself.
So now the sentiment is like this. This is the sentiment
S-
after the rally.
I posted I created a meme also, right? The same thing, right? It's everybody forgot that we have came down a long way. And it's true that I do understand there are quite a few people that enter at the lows. Some people have been bargain hunting, but I presume that that same group of people will probably exit if we see a 10, 20, 30% increase. I think it's a similar train of thought when you look at Meta. Back then, what happened to Meta? It collapsed very quickly, right? 300 dropped to 18, a short span of a few months. So similarly, those that went to Chaoti, right? They went in at 80, 100, 120. They all exited at 180, 200. Then when Meta went back, everybody just, oh, you never lose money when taking profits. I mean, it's true, but at least it's a different game that we are all playing. Lor. So at least for me, I still hold my Meta shares. And presumably when Alibaba comes back, hopefully, fingers crossed, I think we will all have different game plans with our shares and position. Lah.
Yeah. Actually,
Yeah.
this rally, like we're talking about like one day rally also because there's this news talking about China is mobilizing what 2 trillion yuan, right, which is $278 billion to pump the market. Actually, I didn't read into the details on what exactly they are trying to do, but it seems that now I mean all this like good news coming from the government also is not the first time they've been coming up some new measures to help the market. But sometimes it's like one day they do a positive announcement, then 2 days later, then they come back and whack with another rectifications, right? So my feel is that right now, I think they are losing quite a fair share of like trust from the markets. Even right after the speech given by Li Qiang at Davos, right? The next day, the market tanked already because there's lack of stimulus. Then one day later, they changed already. So the question now is that many people believe that if you invest in Chinese stocks, right, or Chinese market, right, be it Hong Kong or China, you are essentially gambling because they don't follow fundamentals. It's all, like retail investor do gambling like this. So I just also like want to open the floor for discussion and we want to involve both Eric and Kelvin as well, right? So what do you guys think? Do you think that China is still cannot be trusted, hence both of you staying away, or what's the feel right now?
Actually, I believe, well, I hate to say this, I believe in the Chinese government. I think they know what they are doing actually, a lot better than the US lah. Whether they can be trusted or not, actually, it's not whether they can be trusted or not, it's that whether they know what they are doing I obviously they know what they're doing for the Chinese people, but that takes priority over the stock market, ma. So, but recently they have been actually prior to this announcement, the stock stimulus thing. I think 1 or 2 weeks ago they announced that you can't short shares for the Chinese market, right? So there was another of their strategy to stop the market from continue going down. Since 2021, the China stock market has dropped by $6 trillion. So this $278 billion stimulus thing is like it's going to pump up a bit only. So to let the Chinese market continue going back up, the rest of the investors need to have higher confidence than what is now. For that to happen, the China government has to stop doing all these measures, all those like sudden moves here and there. Personally, I feel that they will, after a while, when everything has like what Eric said last time, right? Once the Chinese government has stopped whacking all the problems, I think this whole sentiment will change eventually. I think that a while ago, Bundy also showed this China graph, right? Prior to 2000, China was actually outperforming the US. Then after 2000, because of low interest rates, because of all the money printing, US only started to outperform China. Yeah, so that's my sentiment right now. China stock likely will stop dropping already because the government has like put a support there already. But I don't think it can go back up, continue going back up unless investors' confidence comes back.
Yeah, I want to ask a little bit about the banning of short selling. Does it mean that in the Chinese market and also Hong Kong, right, you cannot short sell any stocks forever? It's not a temporary thing.
Actually, I don't think it's a forever thing. I think from what I understand, it should be a temporary measure.
Temporary measure.
Yeah.
Okay, because I was trying to find out, because I think even the US, right, they have also at times banned short selling. Like when market was in turmoil, they kind of banned the short selling. But I'm not sure, like at the time where they imposed the only thing that it did was that it limited liquidity. Like it dried up the liquidity rather than stemming the what do you call that, the decline in the stock price. So I'm not really sure, like, okay, Chinese government is they want to stop the short selling. Does it really help the stock market? Like, would it stop the market from going down? And in fact, is the going down because of people shorting it?
I think it's a partial thing, right? Not short selling is just a small part. It's just a traders, so the bigger part is still the investors, Now all the investors are trying to pull out. It's only like left Jiking who is trying to support the entire market.
You can rallying the whole market.
If I'm not wrong, actually, it wasn't a government intervention also, by the way. It was just one of their largest broker that suspended the short selling. So you go in, you basically can't click the button to sell in your brokerage account. But I don't think it's a permanent thing where they set into law. That's what I remember lah. Yeah. On the drying up liquidity, what's the short percentage of the outstanding shares? That one, I don't have the answers for you, sadly. So I guess you just take the fact as it is lah.
Over the past 1 to 2 weeks, right, I also a bit active on Twitter, on X, and then post some, charts, some informations related to China. I noticed that there's this very negative sentiments towards China, and the negative isn't like very specific one. It's more like just a very broad kind of understanding and sentiment say that China, because of communism, because of dictatorship, the entire market is uninvestable. I think I got that quite a bit. I don't know why. Is it because I don't know, maybe those who saw my post, the bear on China bears are basically come and post to me and leave all this negative sentiment there. But I'm find quite interesting. Like one thing, right? Like people say, okay, maybe even China stock performance has been well in the past, but that was until all the common prosperity policy came out, right? Then they say, okay, that's a big U-turn already. And this common prosperity, I'm also curious, like whether it will be something that like a gravity to pull down Chinese stock market, right? Because think about it, right? Let's say if you believe Xi Jinping really like this entire common prosperity is like his number one goal, And for stock market, right, shares ownership is always like a small percentage of the wealth of the countries, because there's still quite a huge proportion of people actually don't have uh, shares ownership, like equities ownership, right? So what it means is that if the stock market goes up a lot, right? Let's say goes up a lot over the next 10, 20 years, right? What it means is that the inequality will be a lot bigger. So definitely there will be incentives coming from the government to do something to like bring down the stock market to ensure that the wealth level among the citizens are about the same, right? Don't you guys think so? Maybe it's not like they want to bring it down to zero. It's more like you have a hard time to keep going up like the US markets. I'm not sure. I just want to hear opinion, especially from Chicken, China Bull. How will you refute this statement or this kind of sentiment?
I wouldn't because it's a story. Why would I want to refute? There's merits to it. It's part of the story building process. So it's always price driving narrative, right? So if today Chinese market, if we turn back time 3 years ago when 2021 Hang Seng, Alibaba, Tencent was all at all-time highs, right? Then I think at one point in time, Tencent was also eking to like top 3 or top 5 in market cap. Back then they will say communism is good. Wow, China is doing all the best things for the companies. So now when it crashes down and then it goes down to like I don't know what levels, then everybody say communism is bad and whatever. I think the whole idea of like share ownership, whether equity market is good or not, in the long run, what's gonna happen, nobody knows lah. Who that's why for me at least, right, I'm not buying an index, or at least I'm not encouraging people to buy an index anyway for Chinese market, because I do believe the market is a little bit more less matured. You can't really close your eye and just buy like the S&P 500. I think at least for now, based on existing literature, the SPY is still the only undisputed king of index. Like you can only buy the index and close your eyes. For the rest, I think if you're picking stocks or if you're buying a part ownership of the business, and if you really think of it that way as your investing principle, then I hope that logic would trump everything. And assuming that the company is doing well and they actually are able to reward shareholders, whether it's via buybacks or dividends, you should be able to get your supposed reward lah. In the case where we take the idea of a PE ratio, what's the point of a PE ratio? You're just trying to find out, based on the current earnings established by the company, how many years you're going to take to get back your entire invested capital. So if they're trading at 6 times, 7 times, 8 times PE, the logic is, assuming that there's no growth in earnings, they're able to sustain their earnings within 8 years, you're going to get back your entire investment. So that's just in general how I think about investing about in specific companies lah. This whole idea of what China will keep their stock price low, communism is bad, y'all can continue on with your storytelling lah. I'm not interested in engaging in the discussion in the first place.
I got a question for you guys. Let's say if based on what we all know today lah, do you think that US or China market, we should give higher returns, annual returns over the next 10 years, starting from like right now?
Actually, if you talk about valuations, of course, China market is a lot cheaper now, but we don't know like how long all this negative sentiment will be around, right? Because if you think about it, like all this geopolitical tension and then the entire story that people want to divest and diversify away from China, they want to grow India to take on the role of China. All this just started not long ago. Probably it will still run for another few years, right? I mean, one proxy you can take is that like Apple's, they used to rely a lot on China for the Apple products, both the manufacturing side and also the markets, meaning that the buyers, right, buying all these products. Now they try to bring out India so that in a way, not to fully substitute, but at least take up a greater shares compared to, let's say, 3 years ago. So I think all this trend, right, will probably continue even if US-China relationship getting stabilized and maybe even improve a little bit, right? I don't think it will go back to the pattern or the trend, let's say 5-10 years ago. So this tension will always be there, and there will be effort to try to like suppress China. So I won't be surprised, let's say China, because of all this sentiment, it won't recover for another 2, 3, 5 years. So if your outlook is only 10 years, I think hard to say really. It depends on all this sentiment. But I'll bet that, or like looking, let's say 5 years, I will be more confident to say it'll be US that is like getting better returns. But 10 years is a bit like I don't know, because all this trend can change. 10 years is too long to make any prediction anyway. Yeah. But 3-5 years, I think it will continue. Whatever sentiment that you feel now, right, will continue. That's my feel.
And what does Eric think?
Eric doesn't know, to be honest. 10 years, I feel is a little bit too long to do a prediction. In fact, if y'all know me, right, I'm always a little bit tempted. If I were to make a prediction, right, I will always try to rely on the TA. Like yesterday, right, I see the Alibaba jump 8%, right, 7.58%, right. Then immediately I think to myself, 8%, that's considered a breakout, right? Like kind of can be a reversal candle. So I went to look at the volume, and then I saw that the volume is like 2.5 times more, based on the average. So I look at yesterday's volume, I thought, it's quite okay. But then I zoom out to the whole year, right? I saw that there were quite a few days that you have like 50 million shares traded.
来了. Okay, continue, please.
Yeah, so if you look at all the trading volumes, right, there are certain days that the volumes is like pretty high also, 63 million, like this one here. This one here also not too bad, 53, which is same as yesterday lah. Here also 46, here also 60, this here all 50 something. Then there's even a day that's like 118. So I thought that the breakout was like a very big improvement in the volume. So if really there's a huge mass of people coming in, but to be frank, 2.5 times over the daily average is nothing to sneeze at lah. So I mean, technically speaking, you should see like at least maybe 1 week or so of follow through. Hopefully 1 week or so of follow through, then maybe price can stabilize. That is the best scenario for this reversal candle. The worst scenario is next day it drop back. that's like the absolute worst scenario. Because if the next day, right, drop back, no, that's not the worst, sorry. The worst is it drop back, right, reverse the whole candle with equal or higher volume. That one is gg.com. Get ready for some margin call. Technically I'm not saying fundamentally. Fundamentally, I also don't know. I'm not that good with Alibaba, but I just know that technically it means that now traders are trying to like rally everybody. Hey, bros, come on, now's the turnaround time. If nobody bites, then it's very bad. Then the initial traders who want to pump it up, right, they'll be like, oh my god, I'm gonna be a back holder. Then they will be the first one throwing. Then they will add to the selling pressure. So all this is like a bit human psychology.
Yeah. So what's the probability now? Up, down? What's your assessment?
No, you definitely have to see tonight's the first hour of trading. If tonight the first hour of trading got good follow through, fingers crossed, it can last the whole day. Yeah, because usually the traders they follow 5 minutes. So if they look at the thing, right, like it's green, then they're like, all right, bros are coming back in, degen bros coming in. Then they want to like, okay lah, hey, come on everybody, they call all their friends, come on, let's trade this. Then okay lah, then there's a fighting chance. If not, very difficult.
The degen bros are at the crypto area, not looking at China area though.
No, this arena, right, is the value investor bros. So if no blood, then they don't like. So
but the biggest value investor, AK, is gone, right? Unless he's back, then he announced, then all his followers follow also.
it's back. He's not back, I have to ask Chikeng that one.
He didn't sell. He's just back holding.
Yeah, lor.
Yeah.
But the thing is, I think when I watched his video, right, I thought he was looking to sell, like the rest also.
Looking to sell but he didn't sell because at this price you sell also a bit. I think 你过不了自己那一关You'll be like thinking, what kind of valuation is this? Then you just question mark. Unless in your assessment the fundamentals change which in his case he thinks that Tencent it was destroyed Yeah.
But he say he don't have what sentiment one towards stocks, all follow all logics one. Look at his latest tweet.
Yeah, so the Tencent last straw was the new regulations that broke his thesis lah. Because the gaming part, even he don't even want to see, he don't even want to wait for the results to come out. His assessment is this will destroy, and then he just went ahead to sell. I think just some background context also, because some of you might not really know him. Actually, he don't really like Tencent because of the gaming business. It's in direct opposition. If I'm not wrong, at least the context was because he has a team of analysts, like he has a team of people doing research for him on stocks as well. So a lot of them have been pumping Tencent, saying that their fundamentals is better than Baba. But he just doesn't like the natural economics and the industry of the business. But he acknowledged that the fundamentals was good. But that breaking point was that new draft regulations that came out with some damning introduction of how they can regulate games. That's why he decided to sell. So that's just some background context. Yeah. But anyhow, Bunty.
Yeah, I just want to ask, there's an update on that regulations, right? It get pulled off already, right? Like there's no changes made, right?
This I don't believe. This now all speculation, but at least from what I believe, at least when I look at some of the social media discussions online, right? It's very popular. The draft regulations are very popular amongst the people. So I do believe they will be implemented. It's just that to what extent and how tough they want to be on the companies. But why they pull it off is because yesterday, which is 23rd, they put it off because the deadline for the soliciting of advice and opinion was on the 22nd. That's why they put it off. Finish already lah. Means they they conduct a study, they open up the forum, and then they close the forum. That's why. The implementation I think comes at a later date, but I don't believe it goes missing. Meaning I don't think it will just tell you then sorry guys, like a U-turn in one of particular country specific to our transport system lah. I don't think that will happen. The China will continue with it. So Bunty, Chinese market still can buy, or Chinese ETF still can buy.
Yeah, I think for this year, I will add some positions into China ETF lah. Although you advise against ETF, but I don't think I'll spend a lot of time studying the markets and then understand the details of each companies, right? So to me, it's just like the index is good enough for passive exposure. Won't build extremely large positions. To me, even if it is like 10-20% is big enough, because over the world index is China currently is only 3%, but if you look at the GDP of the country, it's much higher than that, right? So I just want to take advantage of the low valuation, and at the same time we all know that US has been hitting all-time high after all-time high, right? So if I want to add into US also, probably take a bit like the slower pace for now lah. That's my positions as of like early 2024. Yeah.
I want to add on to what Kunti said, forgot his name. So this is the comparison between China and the US. So the bottom chart is China index divided by S&P index. It has been going down, quite sad already. China PE right now, I think it's like what, 12 only, versus S&P is like 26 right now.
Hang Seng is 8, if I'm not wrong.
That's even sadder. And here's the thing. This is by JP Morgan. So they found that by looking at S&P 500 past data, they look at the forward PE and subsequent 5-year annualized returns on the chart. So they find that right based on S&P current forward PE, right, the future 5-year annualized returns will be rather low. I think it's only 5% only. This is by Vanguard. So they saw that like the past 10 years, right, US stocks were outperforming international stocks. Yeah, because of what? Valuation expansion, earnings growth, foreign exchange return. But then they foresee that like in the next 10 years, US stocks will underperform international stocks. So it's not only like China, it's all the rest of the world. It's the international stocks turn to grow a lot faster than the US stocks lah. I'm saying all this is because there's mean reversion will always happen lah. I feel this is true for China stocks. So China stocks, it goes down. Like how low can it go? Maybe 0. But at the same time, I also don't believe US stocks can go up forever lah. So I think at one point in time, China stocks will start to come back to the mean, and US stocks will start to come back down to the mean. So that's why I feel that at least for the next 5 years, maybe not the next 5, next 10 years, is possibly that China stocks will outperform US stocks.
So
And
you got buy? As in, you're gonna position yourself to take advantage of this whole theory that you just talked about.
I'm tempted to buy the index lah. I can buy, but I am not willing to throw in too much money lah. Yeah, it doesn't support my goal of retiring early lah. Because this is just a theory versus the other thing that I'm more sure about. Because for US stocks, okay, let's say flats, right? A flat US stocks is actually good for me because it makes my option strategy a lot easier to do. Versus US stocks keep going out, right? You keep getting caught, all your stocks keep getting caught away. And to avoid getting caught away, your calls have to be further out. Have to be further out, which means lower income. So I'd rather go with US stocks, which is much more predictable.
Yeah, actually, all just waiting for the queue from Chiking.
I queue since 1-2 years ago already though.
No,
You need to make a different queue, right? Everyone is
Yeah.
like, yeah.
What's a different queue?
It's
I
like
sell,
every-
then you all buy, is it?
Yeah, you must say if you all buy 10K, right? I match your 10K.
Sorry, my name is not Jerome Powell. I don't print money.
You need that, like, you can retire on China stocks, that video, like Darren like that.
Sorry. I don't like to do that kind of thing. Later, anyhow retire.
No,
Wow,
you
jialat.
can do the parody video. You can like tell them this is how you cannot retire.
Then I show them the 26-year graph, right, from Hang Seng, 15,000 points. Actually, actually that's the very jialat thing, because we always think. So there's a group of influencers or YouTubers or whatever that advocates for dollar cost averaging, right? But they talk about it in the US context. Then some viewers, right, they will extract and extrapolate it, Then they always think, oh, I buy index very safe, So then I went to dollar cost average into, for example, Hang Seng. The sad thing is, if it stays flat and it goes down, it's still okay because your dollar cost average down. But if you look at the Hang Seng index, right, it actually went to a peak of 30 plus thousand, then it crashed back down. So means when you average in for the last 26 years, you're averaging up. So your cost would probably be closer to 20 plus thousand, and then you are down at least a good, I don't know, 15-20% after averaging for 26 years. So that's usually the scary part about DCA upwards. You get what I mean? Hopefully it comes back, mean reverts back up again.
I would say nothing scary. You have to just know that when you put your money into stocks, right? So there's always risk there. Like doesn't matter the sticker go up or down, right? Because like the companies, they don't have obligations to pump up the share price. They don't have obligations to make sure that you have a good returns. So it's just that you over the long term, of course, we tend to expect that the fundamentals will follow. I mean the share price, but all these sentiments could last very long. It could last like 5-10 years, right? And if you are unlucky, the share price drop, then there's a losses. So all this risk premium or the higher expected returns, right? It's not a sure thing. Yeah, so you just need to know that this is the risk that you're fine with when you put your money. Don't think that as long as I DCA, then confirm good returns. I think this is just the wrong expectations.
I completely agree, but I'm just worried how some people portray the idea of buying into an index, even if the SPY, right? When you just keep pressing calculator or keep putting into a compound calculator, 8%, 10 years, 15 years, and then show you is 6x, 8x, 10x your money. They haven't taken into account that even the US market has went through multiple lost decades, in fact. 10 years, 15 years, 20 years going nowhere. So that's just the worrisome thing. It's all about managing expectations. We hope you enjoyed the discussion. I think in general, whether China can buy or not depends on your risk tolerance. I mean, it's always the standard few things that you have to consider. Your risk tolerance, your time horizon, what are you looking for in an investment? I think no doubt that it's getting more polarized on both sides. Bull getting more bullish, bear getting more bearish, telling you that this cannot make it. And I think in a few groups also, people touting for like complete stock market disaster. This whole thing will go to zero. I guess you just take a more neutral stance, at least from Eric and Kelvin's perspective. Look at it objectively. If you want to allocate, can allocate a little bit only. Don't need to go all in. Don't go leverage. And yeah, we'll see you guys in the next video. Goodbye.